Earnings season is such a genuinely exciting time period for all investors out there. PayPal, this is a stock we're up about $57,000 on. There's major changes going on with the business model that I need to show you, okay? These changes just came out here today. I need to show you what's going on here and why it matters so significantly for the future of this company and this stock, okay? We're going to talk about where this stock is headed. People are looking at the move here today with the stock price and like, this isn't much of a move here. We thought like there would be a bigger upside downside move. We'll talk about where the stock is headed. Today is just a pump fake, okay? Third thing we're going to speak about in this video is the stock a buy here today or not? Was I personally buying this stock this morning or not? We're going to get into that in this video. Then we're going to speak about SoFi Technologies. SoFi is a stock we're up 48% on now at this point in time in a pretty short amount of time in the public account, right? Where's this business model headed? There's some major changes going on here with SoFi, and I gotta say, it's way better than even a bull like myself thought. I'm saying like SoFi's business going way better than expected. Get ready to have your socks knocked off in this one in regards to SoFi. We're going to talk about where this stock price is headed. This has been a very hot stock here over the last couple months here. Where's it headed now? Okay. Third thing we'll get into is the stock a buy here today or not? Was I personally buying the stock here today or not? We're going to get into all that in this video. Action-packed one. All I need from you guys, all I need is you to hit that thumbs up button, smash that thumbs up button, gently tap it. I don't care how you do it. Just get the job done for me, please. It's all I need from you. If you want to subscribe to the channel, you can do so. No pressure. It's free. 7,300 plus new subscribers in the past 28 days. Appreciate y'all for being here, okay? Alrighty. It's time to get serious, folks. PayPal's got some major changes going on, okay? So, looking at PayPal's numbers here, total payment volume, TPV, was up 9%. Now, that's a good number, but not a great number. And I'll show you exactly why that number is not great. Know revenue. Revenue is up 6% year over year. Good number, not a great number for PayPal. And I'll show you the details. You gotta know where to look when it comes to these financial reports to find out what's really going on here. And I'll show you that in this video. Transaction margin dollar, up 8% year over year. That's phenomenal. If you ever see that transaction margin dollar outstripping the growth rate of revenue, that's a very positive sign for PayPal, okay? If we look at transaction margin X interest on customer balances, and that was up 6%, so basically the same percentage as revenue. Non-GAAP EPS was up 22%. Free cash flow up a whopping 31% year over year. Alex Chriss, the president and CEO of the company, he said, PayPal had a highly productive third quarter. We made good progress on our continued transformation while delivering strong operating and financial results. We brought multiple innovations to market, coupled with a significant new marketing campaign, and we are seeing encouraging early adoption. That's great. And we continue to forge important partnerships with leaders in global commerce, including Fiserv, Adyen, Amazon, Global Payments, and Shopify. Thank you to the entire PayPal team for all that you do for our customers. As we enter the holiday shopping season, we're working hard to create the best shopping experience for consumers to help merchants win every sale. The focus and drive across the company right now is unmatched. I'm proud of the foundation that we're building for the future, says Alex Chriss. And the important thing to remember about Alex Chriss and all these innovations they've been launching over the past few months here, just keep in mind, we're not even seeing that in these numbers yet. You'll begin to see that in 2025. 2024 was Alex Chriss' first full year being CEO of this company. So this was just a year of like getting everything in getting the right partnerships, getting the right products and services out there, innovating at a high level, getting the teams all focused on what they need to be focused on. But in terms of it actually showing up in the financial performance, you're going to really see that in 2025 and 2026. This was just get the ship point in the right direction, and then we start to see the fruition of all this hard work next year and in following years after that, okay? Now check this out. Active accounts grew 1% for the company. That's good because that was a number that was declining for a while, and people looked at it and they're like, oh my gosh, active accounts is going down. It's going up now. That's great, and that's off a very large number of active accounts, 432 million. Monthly active accounts grew at even a faster pace. That's even better news. Year-over-year growth, 2% for monthly active accounts to 223 million. That's phenomenal. It's one thing if you just have accounts, right? But it's like how many people are actually using this on a monthly basis. That's a very important number. One of the most important numbers you can look at for PayPal. Number of total payment transactions was up 6%. So let's get this right. Monthly active accounts was up 2%, but number of payment transactions was up 6%. And transactions per account was up 9% year over year. So what that means is people that are PayPal customers, you're using PayPal more and more often, which is something you definitely want to see. Total payment volume mix across PayPal's payments. This is when we begin to understand what's actually going on with PayPal's business, okay? So branded checkout was the same year over year, 6%, right? Really no difference there in the percentage growth. The absolute number is a lot bigger, but the percentage growth, no difference. But here's where the weakness is in PayPal's revenue. And if you're wondering why the revenue growth rate is not much stronger than it is, it's right here. If you look at unbranded card processing, okay? So this is non-PayPal. This is like more their Braintree side. Last year at this time, they had 32% growth. This current quarter, only 11% growth. Now, my personal opinion on that is the company's likely focusing on profitable growth. Remember, you hear Alex Chris talk again and again about we're focusing on profitable growth, not just growing revenue to grow revenue's sake, right? Like what good is it if you're growing revenue and you're not capturing any real profits off of that, right? And so that's my opinion on why this number was very weak compared to the past, is they're likely just focusing on, if it don't make money, it don't make sense, right? And I think that's the situation here. You look at Venmo, consistent growth rate, 8% last year, 8% this year. If you look at P2P x Venmo, right, they were down 4% last year at this time. Now they're plus 5%. So peer-to-peer is going phenomenal x Venmo. That's amazing, right? Other merchant services went from 6% growth to 16% growth, okay? Now, this is a much smaller absolute number, right? It's only 10% of revenue compared to unbranded card processing at 36% of the company's revenue. So the moral of the story is here, and by the way, eBay got a lot better. They went from negative 11% to negative 3%, right? So total payment volume of 9%. So the moral of the story is the revenue could be likely a lot better than it was if they just, were really focused on, making money for money's sake, basically having revenue just for having revenue's sake, right? But it looks like Alex Chris is really focusing the business on profitable numbers, right? Things that actually change the bottom line of this company. Now, as far as the guidance, I thought the guidance was a weak guidance, okay? The revenue, low single digit. My guess is that has a lot to do with the unbranded card processing, right? Non-GAAP effective tax rate, approximately 21%. Non-GAAP EPS, low to mid-single digit a decrease for the company on a year-over-year basis, right? Now, before they were expecting a mid to single digit decrease. So just keep that in mind, right? GAAP EPS, $1.03 to $1.07. The prior was $1.05, so it's basically what they're at. So as far as the fourth quarter goes, definitely a put me to sleep guide there. That's the one weak point I would say in regards to PayPal numbers. But if their unbranded card processing is in a weakened state because they're really focused on profitable growth, like I get it, right? But I would have loved to see revenue of 8, 9, 10% in the fourth quarter. Now, transaction margin dollars as far as the full year, fiscal year 2024. Mid to single digit growth. Now prior to that, they were at low to mid single digit growth. So this is better. Transaction margin dollars better than expected. Non-GAAP, non-transaction operating expenses, they were talking about low single digit growth. Prior was a slight increase here. Non-GAAP effective tax rate, approximately 21%. Prior was 22%, so a little better than expected. Non-GAAP EPS, high teens growth. They're talking about for non-GAAP EPS. Before they were at low to mid-teens growth, so that's better. GAAP earnings per share, $3.92 to $3.96. Prior guide was $3.88 to $3.98. So they're going a little bit on the higher end of the range. That's good. Free cash flow, approximately $6 billion. Share repurchase, $6 billion. No change from prior there. Now, check this out. Another strong quarter building upon the foundation for durable growth. Transaction margin dollars, excluding interest income, up 6%, driven by strength in branded checkout, Venmo, and Braintree. Braintree I feel like is a little in a weaker spot right now, right? Improving checkout with faster and simpler branded and guest experiences. Reinvigorating brand awareness and driving engagement with PayPal Everywhere and Venmo, enabling seamless experiences that enhance our flywheel via new partnerships and leaders in global commerce, raising our fiscal year 2024 transaction margin dollars and non-GAAP EPS guidance while investing in innovation and our brands. And the transaction margin dollar, that was the one thing that the bears could look at and be like, that transaction margin dollar is not good. It's in a bad place, right? You no longer have that argument to be made, right? The only thing the bears really ever had to go off of PayPal was active accounts going down there for a little bit, right? And transaction margin dollars being in a bad place. You don't have either of those to go off of now. The accounts are growing, right? And transaction margin dollars look in a great place and likely going to get into a strengthened place next year. So to be bearish on PayPal, it just doesn't make sense anymore. You either have to be kind of middle ground in regards to PayPal, like not really a strong, opinion either way, or you have to be bullish on the stock. There's just no being bearish. It doesn't make sense anymore, right? Now, additionally, cash equivalents, and investments totaled $16.2 billion for the company. Debt was at 12.4. So basically, with all the cash equivalents, and investments on the balance sheet, they could get rid of their debt completely if they want to, right? Now, they also returned $1.8 billion to stockholders by repurchasing approximately 28 million shares of common stock. On a trailing 12-month basis, they've returned $5.4 billion to stockholders by repurchasing approximately 87 million shares of the common stock, right? Now, keep in mind, PayPal should buy back between $3 billion and $6 billion of shares, likely, in my opinion, every year for years to go in the future. Years to go in the future. The share buyback we're seeing today is great. Wow, they're taking a lot of shares off the market, and it's really going to help the earnings per share. But just keep in mind, I think they're going to have an onslaught of buyback for years to go in the future of this company because they're able to spit off so much free cash flow. It's a free cash flow machine. It's an ATM of a company, right? So what are you going to do with all that money? They're going to reinvest a certain amount in the business, but they're also going to use a great deal of that to buy back shares, especially with shares trading in these low ranges in regards to P ratios, right? I mean, PayPal's been trading at forward P under market multiple. That's crazy, right? Now, also keep in mind there's about an $85 billion market cap roughly on this company. So when you're buying back $3 billion to $6 billion worth of shares year in and year out for years to go in the future, and you're under $100 billion market cap, it's a good time to be a shareholder of this company. I can tell you that. It's a good dang time. Now, if I look at their income statement here, revenue is $7.8 billion versus $7.4 in the same quarter last year. Transaction expense, $3.8 billion versus $3.6, right? So up year over year, but it's not even up remotely close to as much as revenues were up. Transaction and credit losses fell significantly for the company year over year from 446 to 352. That's phenomenal. Customer support and operations, 427 versus 474. So they brought that number down by, we can call it roughly $50 million year over year. Sales and marketing, they're increasing that quite a bit. They're spending a lot on sales and marketing right now, right? Really branding PayPal strong in the marketplace, PayPal everywhere, commercials on TV, Will Ferrell, et cetera, right? And so certainly that's hurting the profitability right now, but that's all stuff that's going to help PayPal huge long term. Technology and development, they increased slightly in regards to that, not that much. If we look at general and administrative, G&A, 519 versus 507, slight increase there. That's nothing compared to how much their revenue was up, their revenue was up well over $400 million on a year-over-year basis. Total operating expenses, 6.4 versus 6.2. That's nothing compared to how much revenue was up. So their operating income went to almost $1.4 billion versus $1.16 billion in the same quarter last year. So operating income booming for PayPal, booming. Now, the bottom line got hurt by a few kind of, more almost like one-off type things. Other operating income and expenses. So they had an $80 million unfavorable one-off here expense that hurt profitability. Versus in the same quarter last year, they had a $73 million other one-off income, okay? So they made last year their basically the bottom line looked better than it probably should have been in the same quarter. This year it's going to look worse than it honestly should be because these one-offs are here and they're gone, right? Income before income taxes, $1.31 billion versus $1.24 billion in this same quarter last year. Income tax expense, they also had a huge increase in income tax expense to 301 mil versus only 221 in the same quarter last year. So it made their net income look like it was down on a year-over-year basis, but really it comes down to these kind of more one-off freakish type things, right? The obviously the $80 million expense hit hard versus $73 million gain in that quarter last year. I mean, that's a $150 million, that's a $153 million difference there. It's not like that's a small amount of money, $153 million of a one-off there, right? And the income tax expense, they got obviously screwed in this quarter compared to last quarter. So the moral of the story is, like, PayPal, I graded them a B+, but honestly, this was, in the reality, if you take off this one-off here and you take off this freakish addition to income tax expense, honestly, this was like an A. This was like a grade, either an A- or a grade A income statement for PayPal. Like, bravo. Like, Alex Chris doing a hell of a job running this company. Additionally, check this out right here. If you look on a diluted basis, right, they had almost 1.1 billion shares outstanding, right? And now they got that share count down. Like, probably in the next quarter, they're going to have it down under 1 billion shares outstanding of this company. That's an incredible thing about it. So understand, when you're a shareholder of PayPal, you own more and more of the company. Like, let's assume you own the same amount of shares right now as you did at this time last year. Let's say you own 10,000 shares of PayPal, right? Last year at this time, you still own your 10,000 shares. You've become a bigger owner of PayPal over this amount of time now. And the reason being is because they bought back so many shares and expired so many shares, that your percentage ownership has now increased. And as PayPal continues to buy back more and more shares and takes a share count, maybe let's say even under, they could take the share count under 1 billion shares very soon here, right? And then they might end up being able to take it under 900 million over the next couple of years, right? Whew. So if you just own the same amount of shares, you're a bigger owner of this company now. That's phenomenal, right? Now, where's the stock price headed? It's $80 here today. The stock's headed to 100 plus. 100 plus, okay? 3 core reasons. 1, easy numbers coming quarter. Easy numbers. Like now they put themselves into a situation with this upcoming quarter. Those are very beatable numbers. Very beatable numbers. They really, in my opinion, sandbagged there, and they set themselves up for a very positive beat at the beginning of this year. Beginning of this year, meaning the beginning of 2025, essentially. So that's good, right? Second, Alex Chris changes are really all going to start hitting in 2025. Like, we haven't even really begun to see that in a major way in the financials yet. That's going to be 2025 show, so just wait for that. And third thing is, the consumer should be in a better spot in 2025 than they were in 2024. Because remember, the consumer in 2024 came off of super high inflation in 2023 and 2022. The consumer in 2025 is coming off of 2024, where the consumer hasn't been hit nearly as hard with inflation. Inflation numbers have been very good all of 2024. So the consumer is set to actually bounce back pretty decent in 2025 as a whole versus where they were at in 2024, right? And that's going to definitely benefit PayPal in a pretty significant way. So this stock's likely headed to 100 plus. Was I buying the stock here today? Yeah, I was. I bought shares today. I bought shares at $80.96, 50 shares here. The stock's still a buy. It's a buy, and it's a buy. And it's going to probably remain a buy for a while, because even when the stock goes over 100, which I don't think is in too distant in the future, it's still going to be a buy. The valuations are still going to be so attractive because the buybacks are so big. The free cash flow is pouring in for this company. And then you got Alex Chris changes really starting to hit next year. If you get a consumer in a better spot next year than versus this year, oh my gosh. Whew. Like, yeah, the numbers could be looking very, very good next year and in future years. So PayPal's getting positioned in a very good place. And so would I be surprised to see a 120 on this stock in the next 6 to 12 months? Not surprised at all. Not surprised at all. Things are going very good here with PayPal, okay? Now, SoFi. Let's get into SoFi. Before we get into SoFi, I want to alert you guys, we have 48 hours left. For those of you guys looking to see the stocks I'm buying and selling each week in my Patreon portfolio, just today, I sold out of 2 stocks completely in the Patreon portfolio and took sweet profits on those and reinvested all of that money into a brand new stock in the Patreon portfolio. And I posted that for everybody that's in the Patreon to see. So if you want to see exactly the stocks I'm buying and selling each week, exactly how I build a portfolio, You're going to want to join my Patreon before the 30% price increase. You got 48 hours left. That will be pinned comment down there today. You also get access to the Market Hours Discord chat. And then this tier over here, the 125 tier that's going to be going to 163 before people get grandfathered in, right? That tier has the Become Master Stock Market course attached to it, which is a course that's worth $997 value there. So keep that in mind. Pin comment, okay? Alrighty, let's get into SoFi. SoFi, straight banger. Straight banger from SoFi. Oh my gosh. If I had to compare them versus PayPal, I liked it. I didn't love it. SoFi, banger. Check this out. SoFi reported Q3 earnings Tuesday, 5 cents per diluted share, swinging from a net loss of 29 cents a year earlier. Analysts polled at expected 4 cents, so they beat on EPS, right? Total net revenue for the quarter, ended September 30th, was nearly $700 million versus 537 a year earlier. Analysts were at 633. Anthony Noto? What are we doing over there? Oh my gosh. A beat like that is ridiculous, especially in the banking space. Like, and obviously they're more than banking, they're tech, but I'm like, oh my gosh, like, dude, that's insane. Like, this is brilliant. The company said it now expects full year earnings per share of 11 to 12 cents, up from its previous forecast of 9 to 10 cents. Let's go, baby. Analysts were expecting 11 cents. Oh, this is good. But it gets better. It gets so much better. Look at this. This is members. I call them customers. SoFi calls them members, okay? They're up to nearly 9.4 million members. This essentially means that likely 2 quarters from now, 1 to 2 quarters from now, it's a big question, is it 1 quarter from now or 2 quarters from now? Likely 1 to 2 quarters from now, SoFi is going to reach the big milestone of having over 10 million members, which there's not a long list of financial institutions that have over 10 million members. SoFi is likely going to be there in the next 1 to 2 quarters. So it's just a question of, do they reach it next quarter or the quarter after, right? Incredible. New member additions of 756,000 in Q3, bringing the total to nearly 9.4 million members, 35% year-over-year increase. These numbers are getting big, big. And I'm going to explain to you something that's going on here with SoFi's business model that I think is attracting a lot of new members here, okay? Now, there's actually two things I'll go through with you guys. Galileo, think of Galileo as really their tech side, right? Galileo accounts went to 160 million. And if we look at the same quarter last year, they were at 137 million, right? 17% growth year over year. Tech side looks good, looks strong like Donkey Kong. Look at this. Quarterly adjusted net revenue, $689 million. In the same quarter last year, 531. This might be the most impressive thing of everything, right here. Look at the EBITDA margin, earnings before interest, taxes, depreciation, and amortization. That margin came in at 27% for this quarter. If we look at this same quarter last year, they were at an EBITDA margin of 18%. That's a 900 basis point improvement. You're going to be flipping my flapjacks. Oh my gosh. Quarterly adjusted EBITDA, $186 million from $98 million in the same quarter last year. Whoo-wee. If you look at the trailing 12-month performance here, adjusted net revenues, $2.46 billion. That's incredible. Adjusted EBITDA on a trailing 12-month basis, $650 million. Net income on a trailing 12-month basis, $214 million. Now compare that with previous years, right? 2023, they lost $301 million. 2022, they lost $320 million. 2021, they lost $484 million. They have flipped this baby over to profitability, and it's going up rapidly. Oh, baby. Now, check this out. This is the numbers they did versus what they had guided to. They had guided for revenue 625 to 645. They did 689. That's still insane to me. Adjusted EBITDA 186. They were expecting 160 to 165. They blew that out of the water. GAAP net income of 61 mil. They were expecting 40 to 45 mil. They blew that out of the water. Diluted EPS of 5 cents. They were expecting 4 cents. Now, as far as their guidance went, look at this fiscal year 2024 guide. Financial services net revenue growth of more than 80% versus 2023 levels. Lending adjusted net revenue of at least 100% of 2023 levels. Oh my gosh. GAAP net income of $204 to $206 million. Wouldn't be surprised if they come in and still beat that. Adjusted EBITDA, once again, earnings before interest, taxes, depreciation, and amortization, 640 mil to 645. Jeez. Member growth of at least 2.3 million or 30% from 2023 levels. They're taking market share, folks. That's what we call that. Taking market share. I would not want to compete against these guys. They're taking the younger generations from these big traditional banks. And then as those younger generations' net worth grows, oh my gosh, it's going to be game over. Like SoFi, this is how SoFi is going to become a financial giant. Like I hope people really understand what's going on here with SoFi. Like I hope they really get it. Like SoFi's coming in, they're attracting a ton of the younger generation, right? They're getting those folks to be their customers. Those folks have lower incomes right now, right? As they age, they get better jobs, they start their own businesses, their net income goes up, their net worth goes up, right? They're able to get into other financial services products that SoFi offers, right? And SoFi is able to generate a lot more money off of those consumers over time, right? The money they're holding at the bank, all those sorts of things, right? The interest they're paying, everything. And so SoFi is able to become a financial giant over a 10, 20, 30-year span. That's how it happens, right? And they're doing it they're executing as well as I've ever seen any financial ever execute, just to be quite frank. Now, look at this. Loans and securitization, $671 million, almost $672 million. That's from 539 in the same quarter last year. If we look at other, that was 51 mil versus 24 mil. If we look at total interest income, $723 million versus 564. Total interest expense, 292 versus 219 in the same quarter last year, which I love that. Like, sure, it's up, but it's like not even up remotely close to as much as the interest income's up, right? Which means their net interest income, which is basically just taking the total interest income and subtracting the total interest expense. So net interest income, NII, which is one of the most important metrics you can ever look at for anything banking related, $531 million versus 344. Woo! Total non-interest income, $266 million versus $192 million in the same quarter last year. Total net revenue, $697 million versus $537 million in the same quarter last year. Oh my gosh. Now, technology product development, 139 versus 125. So that was up year over year, but it wasn't like some crazy increase. Sales and marketing, 214 versus 186. So they're obviously spending a lot more on marketing, but it's doing its job. It's doing its job phenomenal. Cost operations is 123 mil versus 98 mil. General and administrative, G&A, 148 versus 124. These numbers are all like right in line with where they should be, considering the growth rate in interest income and net interest income. I mean, those growth rates are so phenomenal that, you know, sure, these are going up, but they're what you would expect from a nice growing business, right? Now, something that helped their bottom line out immensely was goodwill impairment. They had a goodwill impairment charge last year of $247 million in this quarter. That one-off did not exist this year. And so, thank goodness, right? So that helps their bottom line phenomenal. Now, also, I think this is interesting. Provision for credit losses, only $6 million versus $21 million in the same quarter last year. That's positive. Total non-interest expense, $633 million versus $804 million. Once again, a lot of that was that huge one-off goodwill impairment there. Interest before income income before income taxes, 63 mil versus 266 mil loss in the same quarter last year. Net income of $60 million versus a $266 million loss in the same quarter last year. EPS on a diluted basis, 5 cents versus a 29-cent loss in the same quarter last year. Grade A- income statement from SoFi. Bravo. Additionally, we look at the balance sheet and we're looking at equity now of $6.1 billion versus $5.2 billion of equity in this, or at the beginning of, at the end of 2023 there, right? So that's a huge increase in just a 9-month span. Incredible, right? Now, SoFi is attracting a lot of customers 2 different ways right now, in my opinion, okay? They attract customers a lot of different ways, but I think there's 2 core ways they're attracting a lot of customers. One is through their savings account product, right? They've, very good savings account product that offers you a pretty high return, right? And additionally, you can set that up with direct deposit. So, your money goes through your checking account and then basically you're able to start generating in savings. I believe last time I checked, it was over 4%. It was over 4% what you could get from SoFi. So I think that's attracting a lot of folks, especially a lot of folks that might be creating their first bank accounts and things like that, right? Additionally, you have this other dynamic that's going on right now where, we all know credit card debt's gone up a lot over the last couple years. That's no secret, right? You can look at any credit card debt chart out there. So the more sophisticated folks, they understand there's kind of a hack that they can do to strengthen their position. So let's say you owe $5,000 to a credit card company, right? Discover, or I don't know, American Express, whoever, right? But you don't really have that $5,000 to pay it off right now, right? And keep in mind, credit card companies usually charge crazy APYs. It might be 25%, it might be 27%. It's like crazy numbers, right? So you would look at that situation and be like, crap, I don't have the money around to really pay this credit card off right now, right? Or I don't want to blow all my cash around to pay this off. So what you could do is you could look at somebody like a SoFi, right? And so that same person then looks at SoFi and takes out a personal loan with SoFi, right? If they get approved, that is. So they go through the process, they get approved for SoFi, they get their $5,000, right? And now they have to pay back that $5,000, or let's say 11% APY versus a 25% APY, right? So then they go ahead, take that $5,000 and pay off the credit card debt, right? So now, essentially, they put themselves into a situation where they still owe $5,000, but the difference is they owe $5,000 at a much lower APY versus an insane APY, right? And now SoFi is the one who makes all the interest on this. So everybody ends up winning in it. You could say maybe the credit card company wins the least because they don't collect all that crazy amount of interest over time, right? The 25% or 27% or whatever it is. But at the end of the day, that credit card loan's paid off, right? SoFi begins to make all that interest, and then the customer's happy because they just probably cut their APY in less than half, right? They're probably paying it's probably like a 50%, 60%, 70%. It could even be an 80% improvement for them versus what they were paying a credit card company. So I think that's another way SoFi is attracting a lot of customers out there, right? And if people have good credit scores, if they have a good credit history, like SoFi is pretty generous with those personal loans. And, because they feel like, if you got a good credit score, if you haven't burned companies and whatnot, in regards to this, you're probably going to end up paying this off to SoFi. And so, it's a good way of generating new customers. And then somebody starts out with that loan with SoFi, right? They pay that off over time. And then SoFi says, we also have this savings account product over here, right? We also have this invest product over here. We also can do certain types of insurance over here, right? When you're ready to get your next mortgage. And so all of a sudden, once you're now in the ecosystem, now they have like 1 billion different products to sell you, right? And so that's what it's all about, getting that customer through the door. And then expanding that relationship and somebody getting more and more in the ecosystem and used to using this and using that with SoFi, right? So I think that's the two ways they're attracting a lot of customers right now. Not the only ways, but I think a huge portion. Was I out there buying shares here today? The answer is, I sure was. I bought 400 shares in one of my portfolios today. $10.54 I paid for those shares. I had to do it. Like the earnings were too damn good. Too damn good. I couldn't sit on the sideline and say, yeah, that's great earnings. Like, man, they blew away what I was expecting, what everybody was expecting. But, I'm not going to buy the stock. No, this was a gift. This was a gift. It was a gift today. That's the bottom line in regards to that. I had to take advantage. Now, where's the stock going from here? My opinion is we're now going to round trip this thing. We're going to move all the way to Jumpman. 5% of people probably got that reference right there. Look at the chart. I say we're going to move to Jumpman. I think 95% of people don't know what I'm talking about right now, but the 5% that know, you think that was clever, okay? So my opinion is we round trip this thing all the way back to Jumpman over probably the next 12 to 18 months. And if they keep coming through these earnings that they just came through with here, we'll be there within 12 months. We'll be back to Jumpman within 12 months. And that's back to where it was, back at the end of 2021. And that was a whole different type of market now at this point in time. But you think about SoFi, right? There's an argument to be made. We should already be back to Jumpman right now. We should already be back to 23, right? Think about this for a moment. Think about where the company was back in those days. Think about where their losses were, their member profile was. Think about where their revenues were. And think about how unproven they were. And think about the fact that we hadn't gone through an interest rate hike cycle yet. And now think about where SoFi is today. Think about how many members they have now at the end of 2024 versus the end of 2021. Think about their net income versus their insane losses they had back then, right? Think about now that we're going into a cutting cycle from the Fed rather than an interest rate hike cycle. And you start to say, gosh, like SoFi's in a pretty damn good position. So there's an argument to be made that we already should be back to where this stock was back in 2021. And it's a strong argument that could be made. But my opinion is, the bottom line is, we're going to round trip this whole thing over the next 12 to 18 months, all the way back into the 20s, all the way back to that $23 number. And then we'll see where earnings are coming out after that point in time. And maybe we'll make the next move up to 30 and 40. But first things first, we're going to round trip this baby to 20 plus, and that's going to be a lot of fun. Alrighty, guys, appreciate you joining me as always. Thanks so much for being here. Once again, if you're looking to get into my Patreon tiers before that 30% price increase, do so today. That will be pinned. Comment down there, see the stocks I'm buying and selling, including today. I sold out of 2 stocks completely, bought a brand new stock in that Patreon portfolio, posted that. So, alrighty, guys, much love and have a great day.